Hello and good morning, guys. Sorry, I have not posted in this Telegram channel for a while. I have not even posted in my YouTube for a while. Today we are solely talking about risk management. Some days ago, I have already explained, I have already introduced risk management. So today we are digging a little deeper into risk management and risk management specifically in forex. Risk management can be applied to many businesses, but for the purpose of this our Telegram or YouTube class, we are sticking to risk management in forex. So here it says forex risk management involves individual action that allow traders to protect against the downside of a trade. So you see, in the world of foreign exchange forex, where billions, trillions of dollars exchange between currencies, risk management is very crucial. Risk management is very crucial for you to protect your capital, for you to not gamble away your money. You have to understand and practice risk management. So the question here is, how can we apply risk management to forex trading? And there are some answers here. How to manage risks in forex, and the first thing here is only deposit money you can afford to lose, and that's a very important concept. Before you deposit money into any broker, before you buy any prop firm, know that this money, just know that put it in the back of your mind that it's a risk you are taking, and this money you might lose 100% of it. The financial market involves significant amount of risk, so just have it in the back of. Do not use your school fees to deposit into your broker. Do not use your school fees to buy a prop firm account. Do not use your expenses money to deposit into your broker, because you won't have the peace of mind to trade it without bias. You won't have the peace of mind to trade it. Only use money you can afford to lose. Only use money that that if you lose it, it won't affect your mental health. And that's the first point. And the second point here is always use stop loss. And in our previous trade, I've already shown you how to set take profit and how to set stop loss. By setting stop loss, it will protect the rest of your capital. You will only stop, let's say you are entering a trade with $100 risk, and your capital is maybe 1000 USD. By certain stop loss in that trade, signifies that you are only willing and able to lose that $100. By not setting that stop loss, that means the rest of your money, the rest of your $900 is up for grab. So setting stop loss is very crucial and really important to all your trades. By setting stop loss, you will know that if the market is going against you, there's a point whereby the market is against you, and you will just go out of that trade. And the next thing here is know your risk tolerance. This is very important, honestly. By knowing your risk tolerance, there are people that they can afford to lose $100 in a trade, and they will still be okay because they know the next trade might be profitable. And there are people that they are not even okay with losing $10 in a trade. So if you are not okay with losing $10 in a trade, minimize your risk, bring it down to $5 per trade. Just risk what you know that won't affect your mental health. And by risking that, you will even profit. You will even be able to avoid trading with emotion and all those psychological things. And the next thing here is set risk to reward ratio, which is the fourth thing. Risk to reward is very important. And by now, I know you guys should be able to differentiate content creators and real traders. And you'll see content creators showing 1 to 10 risk to reward, 1 to 16 risk to reward, and they're hitting that in consistent basis. If you see that, that are not traders. They are just trying to maybe sell you a course, maybe just show you something. The real traders, 1 to 10 is not something that not impossible, but it's impossible to hit 1 to 10 on a daily basis. Just like content creators always show us on their YouTube channel or TikTok or Instagram, they are hitting 1 to 10 back to back and trying to sell you their courses, trying to sell you signals. Just avoid that kind of stuff. Set a realistic risk to reward. Me personally, I mostly trade 1 to 2 risk to reward, and sometimes I even take partial when it's 1 to 1.5 risk to reward ratio. It's all about knowing your win rate, and which is our fifth point. Know your win rate. By knowing your win rate, it will help you not to even panic in a losing streak. Let's say I have 40% win rate. So in 10 trades, that means I might be able to maybe pass, maybe got 4 trades and maybe lose 6 trades. And if my risk to reward is good, even 40% win rate can make you be a really profitable trader. So, and just know your win rate, so that even if you are in 3 losing streak in a row, 4 losing streak in a row, you won't panic. You will know that the next trade might be the win, the next trade might be the win. Don't panic. So this is also another way to manage your risks in forex. And control your risks per trade. We have already explained this, but for you to control your risks per trade, set a stop loss and know that calculate your lot size. Be very good in calculating your lot size. Nowadays there are many applications that you can use to calculate lot size, and me personally, I use the baby pips position size calculator. I will show you how to calculate lot size. So the second to the last trade is keep your risk consistent. By risking consistently and keeping it consistent, it will help you have an edge over the market. Even when you are in a losing streak, you lose, let's say, 3 trades in a row. Maybe you are risking $10 and you risk 3 trades in a row, that's $30. And if you were to get the 4th trade, maybe, and your risk to reward is 1 to 3 risk to reward, but only that trade will make you recover all your losses. So keeping your risk consistent is really very important. And the last point here is take currency correlation into practice. Yeah, currency correlation, which is very important. As you know, some pairs kind of correlate with each other. So let's say sometimes Euro USD and GBP USD, sometimes they kind of correlate with each other, and they will all be going in the same direction. So maybe when you are taking a trade in one of them, just do not trade in the other one. Or there are trades that are oppositing each other. Maybe when taking trade in one of the pairs, do not take trade in the other one. So that if you are losing, you won't lose both at the same time. And this is the end of our second episode of risk management. In the next video, I will show you how to calculate your lot size using the position size calculator, and maybe show you a little more other stuffs.